This video is one in a series of short videos to introduce you to the farm business financial management model. To understand the farm business's records, you need to understand the purpose records serve to and for your farm business. Keep in mind that you want to make the best decisions possible affecting the future of your farm business. A farm financial model is a tool you can use to help make those decisions. It offers a linear and circular process for informed decision-making. From the image on your screen, you can see that there are three primary functional areas associated with the financial management model. Records feed into management reports, and reports will help you integrate financial sense into your farm decision-making. You must collect and organize income and expense receipts or records into an accounting system before you are able to generate financial statements for your farm business. Under management reports, the records are transformed into financial statements for analysis and reporting of your farm's historical and current financial position and performance. Records and management reports provide a good basis for you to make decisions and plan into the future. Pro forma refers to the future view of the farm's financial position and performance, which in turn can be analyzed for feasibility, profitability, and riskability. Pro forma financial statements complement the farm's budgets. Cash, partial, and enterprise budgets are commonly used to assist the farmer in decision-making. In summary, the farm financial model is also a tool for understanding the financial flow of your farm business. From record keeping to financial analysis, this model illustrates how to make sound financial decisions and identifies tools to help in this process.